Now, I mentioned earnings. As the biggest company in the market, Apple has the biggest influence over earnings growth. Last quarter, they beat EPS estimates by nearly 42%. The stock is near all-time highs, but it's underperformed some of the other big tech names this year. Alphabet, for instance, is up 51%. Microsoft up 28%. Facebook up 34%. Even Cisco up 23%. With me now is Sankar. He's an analyst at Cowen with a little preview of what we might expect this afternoon. Krish, what do you make, first of all, of the stock's sort of quiet period? I don't want to make too much of it, but it's sort of underwhelming move this year.
Yeah. Hey, Kelly, thanks for having me. A couple of things I would say. Last year, Apple as a stock did phenomenally well. And, last year was a good year for growth stocks. And earlier this year, what you saw was a cyclical rotation from growth into, cyclicals and value. And clearly, Apple did not fall in the category. So that's why you saw relative underperformance the first 6 months of the year. And then you started seeing, a rebound in the stock from early June, I would say. And I think two things happened. One was clearly there was some shift from, your typical cyclicals to maybe a little bit of growth. But the other thing was what has been very constant the last few months in the Apple supply chain was the iPhone numbers have been extremely strong. Mm-hmm. If you look at most other names, Oppo, Vivo, Xiaomi, Samsung, all of them saw some cuts earlier in the year or sometime in early Q2, but Apple has been really strong. And I think that kind of helped, a rotation back into Apple, where earlier in the year, people are looking, when they look at cyclical names, they look at some of the PC names like HP and Dell, and you started seeing that gravitate back towards growth, and some smartphone names, and Apple stood out thanks to the iPhone.
We have these reports this week that the company may want to boost iPhone production by as much as 20% after last year's 5G super cycle. So why isn't there more enthusiasm in the shares, or is it already priced in? I mean, obviously, it's the biggest company in the market. What is the bar this afternoon? If we sort of talk about this in the whispered number sense, where do you think expectations are, high or low?
I would say expectations are for a beat on the June quarter. So I think that is already kind of baked into the stock. So most investors do expect a beat to the June quarter numbers. They might not guide to September, kind of like what they've done the last few quarters. Part of the reason is because I feel like until all the Apple stores are open throughout the globe, there's always a little bit of uncertainty, and therefore they might give more color on September versus a full formal guidance. So at this point, investors are expecting a beat. And the second thing is, compared to a year ago, the main difference is that people do expect a September release back to the usual cadence for the new iPhone compared to last year, which was more an October release. So that did shift some of the numbers away from the second half of last year. So this year is looking like what it should be, a typical iPhone release cycle, i.e.
Got it.
Q3 should be pretty good, calendar Q3, and so should December quarter numbers.
Let me ask you then before we go, so you have an outperform rating, $180 price target, and I think people might be interested how you break that down. Basically a 25 times multiple on the core business, a lot of the hardware, the iPhone, et cetera, the computers, and you give the services business a 45 multiple. Now, obviously, we know why that business is so much more valuable. It's a recurring revenue stream. It's priced in future dollars and all the rest of it. But is 45 times really justified, you think, for a business that can see a lot of churn and has a ton of competition?
Yeah, fair enough. And actually, Kelly, I still remember, I think 2-3 years ago when I launched an Apple and we had a similar sum of the parts analysis. And I remember you asked me the same question.
No.
But at the time, multiples were much lower. I would say there's been a couple of things that happened. There's been a re-rating in the market in general. So you've seen the hardware business and recurring revenue kind of businesses multiple re-rate. And the second thing is, I would say, when it comes to the services for Apple, yeah, there are a lot of risks, which is like regulatory risk, etc. But I would say the biggest thing is the iPhone install base is an extremely loyal install base, and that kind of helps sustain a little bit of the service revenues. So the real question is how much more subs can they get on the TV Plus and some of these new programs. But the one thing I would also highlight is that, people tend to look at services as a single line item for Apple. I would say it's multiple line items. You have App Store, you have Apple Pay, and you have so many other different things that as long as many of the businesses are doing fine, even if few of them are not, you still get the revenue growth rate on the services side, along with the high gross margin. So I think of services as not a single business, but multiple business lines.
No, fair enough. And I'm sure if I asked you about this a few years ago, even, if you hadn't outperformed that, I'm sure it was probably conservative compared with what the stock has done in the meantime, Krish. Thank you so much for joining. Yeah. We really appreciate your time again today. I look forward to what we hear this afternoon.
Shepard Smith here. Thanks for watching CNBC on YouTube.